Right, so the changes from this fiscal cliff, does that affect this tax season, or is it next year that we have to?
Well, it actually affects both, because it affects your choices to make before the end of the year,
Right.
okay? Because you want to get things in under these lower taxes,
Mhm.
right? And then it's really going to take effect and smack people in the face next year, you know. So if you get things in that that would be affected next year, you get them done now, you know, then you're better off, obviously. So it's a good time to start planning for those things and get it done by the end of this year, you know. And you got a month and a day left to do it, so.
Right. Now, because this year has been a struggle for a lot of people as far as finding work and things like that, I've noticed that there's a lot of people starting businesses from their home, and whether it be part-time or full-time. So for those of us that do work from home, what kind of things can they deduct?
Well, some of the things that I talk about when you're starting a home business is, number one, let's get a room in the home that we can call the office, and it's used exclusively for business. That's number one. We can't have part of your bedroom or part of the kitchen or part of the dining room. It's got to be a separate room, okay? Then that makes everything that is normally non-deductible, like insurance, repairs and maintenance, utilities, partially deductible. And that makes them partially deductible to the extent the room is in size compared to the size of the home. So for instance, you got a room that's 100 square feet and you got 1,000 square feet home, you got 10% deduction for all those things that are normally non-deductible. Again, utilities and repairs and maintenance and stuff like that.
Oh, okay.
So,
What happens if you have to travel for business? What kind of records do you need to keep?
well, that's one of my pet peeves too. Traveling for business, I do it myself. Some of the records that you must keep are any receipts that you spend for that are over $75. Okay, those you have to keep the receipt for. And I always tell people, make a copy of the receipt, because the receipt in a couple of years you won't be able to read it. Okay. The second thing you got to understand is all receipts for hotel, airline, and rental cars, you have to keep them anyway, no matter whether it's over $75 or not. But most of the time you're not going to stay in a hotel that's less than $75, and most of the time you're not going to rent a car for less than $75, and most of the time you're definitely not going to get an airfare for less than $75, right? So you're going to get those receipts. You're going to keep those receipts anyway. But the biggest one is the car and the travel in the car. And people drive for a business. They do it as employees. They do it as self-employed. And the biggest thing about keeping records for the car is you have to keep basically an independent record, okay, of where you did the repairs. So that independently, because on that record there will be an odometer reading. And the IRS will establish the average number of miles a car could drive during the year based upon that independent record. Then you have to have a mileage log. And I've told people from day one that 9 times out of 10 it's easier and it's just as good just to take the mileage deduction as it is to take actual. Unless your car is doing less than 10 miles a gallon. If it's doing 20 miles to the gallon, the IRS is going to afford you $11 per gallon for that car. Well, you and I both know you don't spend $11 per gallon on a gallon of gas, right? So let's say it's $4 a gallon. They're giving you $7 to cover all the other expenses per gallon. So you figure it out. It's a pretty good deal, okay? Because most people don't spend nowhere near as $11 per gallon, right?
Right.
And if you're getting better than 20 miles to the gallon, that gallon per gallon price just keeps going up.
Right.
So if you're driving a smart car, you're getting a heck of a lot of money per gallon. Okay.
Now it seems like there's a bunch of different business types. I've seen S corporation, C corporation, LLC. How do you know which one is right for you?
Well, first off, I always tell people that to create another entity, you got to save taxes to do it. Okay. And when you're creating another entity, you have to treat it separately, like you're working for that entity, and you have nothing to do but work for that entity. Okay, so you had to keep it separate. And if it's not saving you at least equal to or greater than tax savings, then there makes no sense to create it. And I typically say that's about a net income, and that's gross income minus expenses, a net income of $50,000 or more. If you're not netting 50 grand or more off of your business, then it really doesn't make a lot of sense to create a separate entity unless you're doing something that you think somebody might sue you for.
Right.
Okay? So there's only really two reasons people create different entities, and that's one, for protection, and that's usually the biggest, and then the second one is tax savings. So if you think, like a pool service guy, what could he possibly do that somebody's going to sue him so much for that he can't cover with a regular business liability insurance? Because he's going to have business liability insurance anyway, okay? If he's going to be a reputable business, he'll want to have business liability insurance, even if he's running the business out of his home, okay? So most business liability insurance will cover you for doing, for putting too much chlorine in a guy's pool and it burns him, or something like that,
Right.
but it's not going to cover you for, if you totally burn down the whole house, right, and you got to replace the whole house. So it's the chances of that happening though are slim and none when you're the pool service guy, right? So it's basically, you look at, well, is it going to save me money? And then we look at the types of entities you can do. And the types of entities people can do is a corporation or an LLC. And the corporation or the LLC can then elect to be reported as an S-Corp. The S-Corps don't come out of existence at the state level. And all entities are created at the state level. You make an election once you create either a corporation or an LLC to be reported as the S-Corp. So looking at the two types of entities that you really can create, which is a corporation or an LLC, well, the number one decision is, well, are you required to be can you be an LLC, or are you required to be a corporation? Well, most licensed professionals like myself, we don't have a choice. We can't be an LLC, we got to be a corporation. Most real estate people the same way. The Real Estate Board of the state of California doesn't accept LLCs, they will accept corporations, okay? So it depends on what you're what kind of business you're talking about. I like the LLC better because it affords you a little bit more protection. Okay, and that's a long story, and we can get into that some other time if you want to, but it affords you a little bit more protection personally than the corporation does. Now, reporting yourself as a subchapter S or an S-Corp, what they call an S-Corp, is a choice you have to make once you've created one of these entities. And basically making that choice, you have to decide, well, what's tax-wise, what's better, okay? And an S-Corp is a good thing when you're starting out because you get to take any losses that you incur on your personal income tax return. And when you're making a little bit of income, it's better to report it as an S-Corp than a C-Corp, okay? Because the C-Corp is going to pay taxes on it at a higher rate than you would personally. So the problem is that you have to pay yourself a salary. Out of either one, you got to pay yourself a salary, no matter what kind of entity you're talking about. So the salary has to be reasonable. And again, that's something that's set by the IRS code, but basically 50% or more of the net income is what they would consider reasonable. So we go back to, well, we can create two different kinds of entities, a corporation or an LLC, and then we can elect to be reported under either one as an S-Corp. So it basically is a matter of, one, do I need the protection, or can I get that through basic business liability insurance, and I'm making less than 50 grand a year, or do I need the protection and I want some tax savings, and am I going to save about $2,000 a year or more in incorporating? Because that's what it's going to take you to manage it and keep it up.
Right. Okay. All right. So guys, that's Chris Reeder from CDRCPA Inc. You can get his website at cdrcpa.com. Chris, just real quick, I did hear you mention that you travel a lot in your business. We're of course located here in Marietta, California. What other areas do you
Well, I
service?
travel to San Diego for clients. I travel to Hemet. I travel to Corona. I travel around just for various clients, and every now and then I'll get an out-of-state job too.
Nice.
So,
All right, so very knowledgeable guys. Again, that's Chris Reeder from CDRCPA.com. Thank you.
thank you.